ClearPoint Credit Counseling Solutions. People wonder who we are. We are, for those of you that remember, that we are a CCCS agency, or Credit Counseling Services Agency. We are a nationwide company of 53 offices in 12 states. We're licensed to conduct credit and housing counseling in all 50 states. And we have an office in San Antonio. We also have a very virtual counseling network. One of the things that the industry has gone through some transition, like industries do. 10 years ago, 70% of counseling was done face-to-face, 70%. Now it's flipped over. It's about 70% phone and internet. So there's evolution in business, and I think as entrepreneurs, you're going to see evolution in your business and in your industry. That's a fact of life. That's going to happen. And so today, what I wanted to talk to you a little bit about is healthy credit. The bottom line on healthy credit for small businesses is that without good credit, you can't get a loan. And without great credit, you can't get a great interest rate. That's really the bottom line of what credit is. It helps you establish your business. Access to financial resources is critical for small businesses. Many startups, you'll read about them in the paper and you'll see them on TV. I started my business and I maxed out 10 credit cards, and look at me now, 10 years later, I'm a multi-millionaire and those cards are paid off. That's the exception rather than the rule. And one of the things you have to think about, not everybody can be in the NBA, not everybody can be in the NFL, not everybody can be a rock star, and not everybody can max out credit cards and be able to make it a success. That's the reality. So as we talk about healthy credit, what do we need to think about with credit? First of all, you need to know your score. Your credit score is constantly changing. I'll give you a great example. In my family, I'm kind of the finance guy, and I'm always paying attention to what's going on in the market. And my wife, she's kind of like, she has more money than mine, and she is very frugal and prudent, but she doesn't kind of obsess on credit like I do. Several years ago, we went, when I was the director of credit collections at Dominion Virginia Power, and we went to refinance our house, and of course they pull your credit report. I got very angry because they pulled all three, and my wife's credit score was 20 to 40 points higher than mine. I couldn't understand it. So actually, we worked with Experian, and I talked with my experienced sales agent, Experian sales associate. I said, I don't understand. I'm the one that pays attention to this stuff. What's going on with that? Well, there were a number of factors there, and I do get this question all the time. If I do this, how many points will my score change? And the answer to that question is nobody really knows. There are so many variables involved that regardless of what you do, you can't predict what it's going to do as far as points. You can predict whether it's going to be up or down, but you can't predict how far it's going to go up or down. But anyway, back to that story. I went and talked to the Experian people, and I said, I don't understand why. And we both had excellent credit. The difference really came down to a couple of things. Number one, I don't have a whole lot of revolving credit or installment credit. I just have a couple of cards. My wife, over the time, I've worked with her on this habit of, I got 20% off for this card. So she had a lot of revolving credit. So she had a lot of credit available. The other thing that I do is I like airline miles. So I run my credit card up every month, and I pay it off every month. I can't remember the last time I paid a finance charge on a credit card. But because of that habit of mine, I often went over 30% of my available credit on that card, and a significant percentage of my total available credit. So depending on what time of the month they pulled my credit report, that would be reflected in my score. So it then became obvious why my score was a little bit lower than my wife's. So that example just goes to show you that everything you do in your credit life is reflected in your score at some point in time or another. The other thing is people will ask, well, I was late on this bill, Well, how long will that be held against me? And the answer to that is 7 years. If you're late, you're late. There's nothing you can do about being late. However, depending on the module or the methodology that whoever the lender is or the credit card company is, they may have a different methodology. That's why you won't get the same credit score from all of the 3 agencies. But over time, that late payment counts less and less. So the key is pay your bills on time. Try to minimize late payment fees and over-limit fees, overdraft fees. Overdraft fees can get reflected in your score. So it's important for you to know your score. I strongly suggest that everybody take advantage of annualcreditreport.com. Each of the agencies will give you 1 free credit report a year. What we advise people is pull all 3 of them now and then put them on a rotation. Once every 4 months, you pull 1 of them. Because you get 1 from each agency once a year. So every 4 months, you can pull a free credit report. It's not freecreditreports.com. Don't go there. Annualcreditreport.com. And you also need to know what it is, what a credit score is, and why does it matter, and what's in it. Let's think a little bit about the attributes of a credit score. Of course, it's the amount of credit available. That's one of the items. It's probably the largest item is making your payments on time. That makes up about 35% of your score. There are the amounts owed are 30% of your score. The length of your credit history. People are focused on, I need to get rid of those old accounts. Well, your history of credit is a big factor. If you close all your cards from 1995, even though because you don't use them, and your next oldest card is 2001, you've just hurt your length of credit history. So that's something to consider. How much new credit have you applied for? And then the types of credit you used. Installment loans, revolving credit, mortgage, other secured debt are critical. Some other things to think about for maintaining your score: pay your bills on time. If you struggle with timely payment, you forget to pay, automate. It's not like years ago where if you set up an automatic payment, it took you months to cancel it. We're very responsive, or everybody's very responsive to canceling those automatic payments these days. So if you can't write a check on time, automate. Don't skip a payment. Instead of skipping a payment, at least make a partial payment. Or if you're late, don't just say, well, I forgot this month, I'll wait till next month. Go ahead and make that payment. After you have a late or missing payment, stay current. Keep your balances low and pay down your debt. And do not just go in there and wholesale close accounts and think that if I cut out all these accounts that I'm not using, it'll help my score. In fact, it will actually hurt your score. Avoid opening a lot of credit at once. Pay debt, don't recycle. And by that I mean, oh, I've got this 9 months interest-free card, and now it's the end of the 9 months. Oh, here's another one for $500 more. I know what I'll do. I'll just transfer the balance. Was it 0% for another 9, 12 months? Yes, you don't pay the interest, but people look at that. The credit companies and lenders will look at you trying to recycle that debt. Keep your personal finances separate from your business finances. When we have people come into our agency that have that kind of issue, sometimes you don't know whether the they don't know. The individual doesn't know whether their business is doing well or not, because they may be overspending in their personal life and they've got everything commingled. That's very important. As a small business, get a tax ID number, federal tax ID number. Get a DUNS number. That's the way that your business will be tracked by Dun & Bradstreet and others. Get credit from suppliers and start small. Get credit in the business name. Start small. And be sure to separate business and personal. Pay your bills on time. Monitor your personal score on a regular basis, and monitor your D&B DUNS score as well.